All right, 3, 2, 1. Hello, Culture Matters podcast. Today, I am very excited to introduce you to our guest. But before I pick that, here is a quote just for this episode of the Culture Matters podcast. Here it is. The trick is not to learn to trust your gut feelings, but rather to discipline yourself to ignore them. Stand by your stocks as long as the fundamental story of the company hasn't changed. Peter Lynch. See, we believe here at Culture Matters when people read to think, write to develop, listen to hear is unsaid, and speak to let go, they develop more value for themselves and others. So our purpose of this podcast is to uncover the genius of our guests with the goal to make you, the listener, your curiosity cool, because our vision is that human culture is curious, is open, curious, and focused on creating the future. So our mission is to read, write, listen, and speak every single day. I'm very excited to introduce you to our guest today. So over the last 3+ decades, he's had experience not only on Wall Street, but on the street of life. Gary graduated college with an architecture degree and business administration, and personally has been a mentor to me, Gary Nash, since about 2014. We met near Wall Street in the fitness realm, as we could say, but since then has been a mentor and an advisor in the financial and business realm. Today, you can consider him a consultant of the highest order. And we're going to unpack his story and his insights and various things that I'm curious to talk to Gary about. Gary, thank you for agreeing to do this.
Well, Jay, thank you for having me. Good day to you and good day to everyone that's listening. Did you go to the gym today?
I actually was on the treadmill thinking about this episode this morning and trying to figure out, all right, where am I going to focus my attention? And actually in the realm of doing that, I was very curious, what was your motivation for getting involved in the financial services realm? People do that for various reasons. What was it for you?
Well, that's a good question, and thank you for asking it. I had initially went to college for architecture. By nature, I think that I'm a very creative person, and so therefore, it was my goal to pursue my creative aspect of my personality, and I wanted to be an architect. And then about, I'd say my junior year of college, as I'm going through my studies, two things happened. The first thing was that I was up for like 48 hours straight doing a project. And then when it was time for a crit, the professor just walked by and said, "I don't like it." And that's it. There was no reason, there was no rhyme or reason. It was just, "I don't like it." And I said,
Wow.
okay. And then the second thing was that I had a housemate at the time, Andrew Lubliner, who was a finance major, and he taught me how to read the Wall Street Journal. And then when I learned how to read the Wall Street Journal, I said, "Hey, I like this." And so therefore, I was already deep into my degree of architecture, and I said, oh, okay, I only have to take a few more courses to get my business degree. And I took my business degree, and then I came right out of college and I headed straight for Wall Street.
Wow. Was that scary?
Yes and no, and I would say yes, is in the sense that there's no one from my background that I know of that was ever involved in the financial industry. And I would say no, it wasn't scary, because during that time, that was when Wall Street was getting a lot of publicity. You had the movie Wall Street, you had the book Liar's Poker that was out, and so everyone was heading down to Wall Street to be a master of their own universe.
When you say no one from your background, what do you mean?
Family background. There was no one to really, I would say, guide me or mentor me about the financial services field, because no one was in it. My parents, they come from the South, and my father, and although my father did quite well, he worked for a men's coat manufacturing company. And then we were very close to the family, and they did everything that they could rather, to guide me as far as giving my resume to friends and talking about me, giving my first set of golf clubs, which I don't like. I never liked club. There was no one there that could advise me. So I had to do everything on my own.
Looking back in hindsight, would you say that there's certain qualities that your father did bestow you that did ended up becoming helpful?
Oh, absolutely. Jimmy Nash is an American dream story in and of himself. In fact, I'm doing my ancestry on him, and he really has a great story. He was a little boy that was born in Honey Path, South Carolina. His family, they were tenant farmers when he was growing up. He didn't finish school, but he was very, very sharp, and so was my grandmother, his mother, very, very sharp. Only two people that I know that could really do figures, a lot of figures. You give them 100 figures, they both could do them in their head. And
Wow.
anyway, he picked cotton. He worked very hard. 15, and then like about when he was like about 16 or 17, the family moved north to Newark, New Jersey, but then his father died soon after 1953. And then he, being the man of the house, so to speak, and the only man of the house, he took it upon himself that he had to support his family. And the company he started at, Cooper Sportswear, so the story I've been told, he started there pushing a broom and worked very hard, and he rose to become like the senior vice president of winter production for the men's clothing company. So he did quite
Wow.
well.
What? How did he ever, I guess, relay to you what some of the adversity would have been of him rising? Because if I hear 1952, anyone listening to this that's attempting not even fully paying attention, it's a very different culture at the time.
Oh yeah.
So
Oh yeah.
yeah, I mean, real life adversity, hard for people to empathize without personal experience. What type of adversity did he work through, and then how did that, in one way or another, empower you or not?
Well, that's a good question, and I would really urge people who are older and who still have their parents alive, who still have them with them, is to sit down and talk to their parents, as far as to learn who their parents were. What were their dreams? What did they want to do? What did they expect? That type of thing.
Mm.
I wish I would have had that opportunity to do that with Jimmy Nash. I can't answer that. All I know is that he himself was very creative. I never knew what he wanted to do and what he wanted to be in life, but he worked very hard. Where he was from, and so that Honey Path is near Calhoun Falls, and Calhoun Falls is part of Abbeville, South Carolina. Just a little history lesson for everyone who don't know that Abbeville, South Carolina was basically the start of the Civil War and the finish of the Civil War.
Wow.
So, so the community was extremely racist, and he rose beyond that. And when I say get to know your parents, you wonder, well, what was his motivation? What did he see? What gave him that? What was the catalyst for him that he wanted to do better? Because I believe that the whole thing in learning it's all about exposure. And I cannot tell you how Jimmy and Alva, that's my mother, I call them the Jimmy Nash and Alva Nash show, how Jimmy and Alva exposed my brother and I to many, many, many things. I mean, and I guess that's why I'm the snob I am today. But these were things that neither of them came from. They worked very hard, and then
Wow.
well, it's funny, going back to my father, he was the prince of his family, and he was the baby of his family, but he was the prince of the family. And so when we were born, my brother and myself, and I'm the oldest, we were his little princes. And so he gave us everything, and sent. I guess it's one of the reasons why I don't have kids now, because I ain't doing that for anybody. But basically he lived for my brother and myself. So
Wow. Is your brother in and around the financial industry, or did he go another path?
no, he is in the healthcare industry. He is in Tampa, Florida, and I guess I'm in this area. He says no, the two prints from the same prince can't be in the same area or zip code. And so he went south and I stayed north.
In hindsight, I wish I had elaborated a little bit further in the introduction. Class president, and first Black class president, and part of me doesn't, is self-conscious about this. I don't want to marginalize you, but I am curious, and I also kind of remembered in the process of having this conversation right now with you, our listeners are listening audibly. And so you come from a different culture and a different history. And so can you unpack that a little bit, what that was like to be the first Black high school president of a class, having a very successful family in a time that I have not experienced and many others have not, and therefore may not have the self-awareness or groupthink in their lives to have these types of thoughts, I guess I could say, if you unpack that a bit.
Well,
Because
thank you
you
for
went and
asking.
ended up in Wall Street.
It is an interesting question to look back on, especially given the times that we are in right at this moment. But where we were raised was basically a middle to upper middle class neighborhood. In the suburbs. Once again, I wish I would have had the opportunity to ask Jimmy Nash, my father, how did you find this neighborhood? But as opposed to XYZ neighborhood. And why did you choose this neighborhood as opposed to XYZ neighborhood? And see, looking back now, I always thought that it was my mother that was the one that was influential with this, because my mother, she graduated high school, she did a year of nursing school, but no, this wasn't her. This was Jimmy Nash. But anyway, where we were raised was a middle to upper middle class income. It was basically mixed. And to be quite honest with you, there was the Black section of housing of the neighborhood, but we didn't live over there. We lived on the other side of the tracks, if you will.
Wow.
Growing up, we were the only Black family for the longest period of time in our area in the neighborhood. Now, with that said, I personally did not experience racism or know what racism was until I was like old, like about 16 or 17 years old. And I won't tell that experience, but I mean, never did. All my classmates, I felt that I was treated as an equal. All my teachers treated me as an equal. There were lots of opportunity. With that said, I was always interested to a degree in politics, and I still am, and I follow politics quite closely. To make a long story short, I was elected class president of the senior class, and I've been told that I was the first Black president that had ever been in my school. In fact, one of my former high school classmates, he got in contact with me and he said, you were the first, he told me this, he said, you were the first Obama. And then another one said, Obama took your job or something like that. But it was a great opportunity. I was the primary speaker at the graduation. It was an excellent opportunity in an excellent school. But it was an opportunity, I have to admit, that was provided by my mother and father, who worked very hard. And I'll give more credit to my father because he just had this dream of where he wanted his children to be.
Wow. So you're on Wall Street in the mid 80s, is that correct?
Yes.
And what did you have a plan at that time? And what did it look like if you did?
I didn't really have a plan, and I would have to say that was probably one of one of the few, and when I say few, I can only think of 2 or 3 that Jimmy Nash ever said to me when I first went down to Wall Street. Because just before that, I didn't think I was going to go into entertainment business, but I was an entertainer. I was a singer. I was singing all over the place, and my father didn't like that. But then when I was going down to Wall Street, one of the first things that he said that was negative that always stuck with me is said that those white people will not give you will not let you get not give you their money. So that was the only thing negative that he's ever said. But then that's a reflection on his background and where he came from, you know. And although he didn't let that stop him. But
Yeah.
basically, he said that to me more as a protective type of thing and said, maybe you want to think of something else. But to answer your question, no, I didn't go down. I did not. I mean, there was no plan. The only thing that I had was books, movies, and it was more like it was more leaning more towards books that I read that gave me a sense of, oh, I really want to do this. I like this. And then that was the thing of the time. Everybody was heading down to Wall Street.
What's the normal day look like in the beginning of that experience? And were they formidable to where you ended up?
Yeah, it depends. I mean, I started my very first job on Wall Street was at Lehman Brothers, a very prestigious investment company, or was, because they're no longer in business. But they had a nice name for it. But what it came down to, I was nothing but a cold caller that was being paid minimum wage. I made 300 calls asking people and trying to qualify them. And if I got somebody qualified, then I would submit that name to my broker, whoever I worked for. And then they would call the contact or the hot lead, so to speak, to try to close a deal and try to sell them on something. Now, the thing with the Lehman Brothers, it was called the broker. That's what it was called. It was called the broker trainee program. You were a cold caller, but you would do that for like about 9 months to a year. And then they would sponsor you for your Series 7 license. Series 7 is one of the licenses that you need in order to be a retail broker and in order to deal with the public. But once you pass the test, you would have to leave Lehman Brothers. You would have to go work somewhere else because they didn't want to invest the money in training you or take the, or I mean, I'm sure they did risk reward type of thing, but you have to build the book. And so you work for someone else for like a year or 2 years. I think it might have been 2 years. And then you would come back to them with a book. Therefore, you're already coming in, making money for them, ready to make money for them.
What do you think is the reason, looking back, that they would do it that way?
Oh, it makes absolute sense. It's, you could almost equate it to today's college student. For example, to live in New York City itself, you need like about an $80,000 salary, and even with that type of salary, you're struggling. Now, to be honest with you, coming right out of college on graduation day, I'm going to pay you $80,000, and you don't even know how to pick up a phone. You don't know how to interact with it. So, you don't want to put that risk in training and grooming someone up. So it made sense that, Lehman Brothers says, okay, you go make your mistakes, you go learn someplace else, and then you come back to us and you're much more nurtured, and then we'll teach you our way. But see, you have a book of clients, which means you're turning money right away. So
what are people looking at? Part of what I want to accomplish in this show is to crush some of the misconceptions, misnomers, open up the box, the black box for our audience when it comes to Wall Street, because I haven't had a lot of guests at this juncture on with this experience. So what do people, firstly, what if you were explaining to the most lay person, what is happening on Wall Street?
What is happening on Wall Street? Do you mean what's happening right now, or how do they get involved with Wall Street?
Let's say, no, what I mean is, how does it work relative to Main Street, the general culture? What exactly happens? What's the purpose, or what purpose does Wall Street serve from your view?
The purpose of Wall Street is to make money.
Yeah, okay. Yeah. Can we start there and elaborate and unpack what that means, what that looks like? And
well,
how
I'm
does
going
that impact all of us?
to impart a little bit of advice, because people here, they say I have a broker, blah, 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 and I own stocks, blah, 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 blah. Here's the real skinny on that. A broker, a retail broker, is nothing but a salesman. And unless they build a book to a certain level, they couldn't care less about you or what are your financial objectives. They want to do trades so they can make commissions and so they can get paid at the end of the month. Now that sounds rather harsh, but that's what it is. Especially, as a retail customer, many people do not know the appropriate questions to ask their broker or their future retail broker. So therefore, if I'm a retail broker that's just starting out and my company takes down a block of XYZ stock, all of a sudden I'm giving you a call and I'm just calling you and said, I've got this most wonderful thing that I think that will be perfect for you and it's going to make you lots of money. I don't know that. I really don't. The firm took down a block of stock. My job is to sell that stock. So I got to find somebody to sell that stock to. Now, here is how a retail person should be looking at Wall Street, because it's basically got a bad reputation as being a casino gambling place or something like that. Yes, it can be. But I believe that it is truly a place for investments and that you can make a lot of money. Meaning that I always tell someone that's very interested in getting into the market and buying stocks, okay, start with what you pay bills to. If you have an electric bill and they have a public company, buy the stock. If you have body products that you really like and it's a public company, buy the stock. If you have the gas company, if they have stock and you're paying a bill to them, buy the stock. Let them make money for you, on and on and on and on. Telephone service. Who's your cell phone service? Is there stock? Buy the stock. And so therefore, if you buy that and you build it up in increments, and you don't have to buy a lot at one time as small retail investors, many companies have DRIPs, which are dividend reinvestment plans, which you can buy a portion of stock, have the dividends reinvestment, and over time, before you know it, you have a lot of money. A story I can tell you, it's a very true story, and I'll try to tell it because it's very old and I don't remember it. But apparently I was doing a project where I had to find lost shareholders. And this was a railroad company that went back into, I guess I'll say the Vanderbilt age. Vanderbilt. And the stock had split, it had doubled, it has been bought, blah, 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 blah. Anyway, I finally got the shareholder on the line, and it was a woman. And it was her husband that was the worker of the company. And she says, yeah, Jim Jones, and I'm just making up a name here. Jim Jones, he was a terrible person. He was the worst husband. I loved him dearly, but he couldn't provide for me, whatever, whatever, whatever. Well, I said, Jim Jones must have did something right, because out of his paycheck every week, he bought shares of the railroad company.
Huh.
And those shares you're holding is now worth close to $2 million. And then, of course, she goes, what? And I said, yeah, that one share that he bought has now manifested itself into close to $2 million. And then all of a sudden, she just breaks down crying. I knew I loved him. I knew he was such a good man. He provided for us, on and on and on. So those are many true stories of what happens on Wall Street. I remember starting out in Wall Street in Berkshire Hathaway, which to this day I still believe is the most expensive stock on the stock exchange. I remember that it was $3,000 or $4,000 a share. I could have done that, meaning that I'm going to take your time, but I could have just bought one, and if God is good and the gracious and kept me out of Macy's and Lord and Taylor, I could have bought two. So that would have been an $8,000 investment. That $8,000 investment would be like about close to $70 million today, just on those two shares. So these are the stories of Wall Street. That's the buy and hold strategy. But then you got those people that say, oh, they like to brag, I own stock in XYZ company and everything like that. And you're looking at the stock pages every day. Please. It's not for you. That's for traders. That's for traders to do that, or speculators to do that. But if you are an investor, you are investing for the long term. Now, the long term
Mm,
means that you might not see it, such as Jim Jones didn't see it, but Mrs.
mm.
Jones saw it. And then, she speaks highly of her husband now. I'm sure to this very day, she's not dead herself. So,
What are some questions or that one listening would maybe want to ask the broker to see, is this person on my side or not? And what is
I
the
want
relationship?
good question. Good question. I would say one of the primary questions is to ask, how long have you been a retail broker? Then it's very important to find out who they are working for. And I should say this, not that it should matter. As I said, I started at Lehman Brothers, but Lehman Brothers did the same thing as ABC Schlockhaus. And when I say ABC Schlockhaus, these are your shop firms, which no longer exist, that,
Mm.
they come up with, they find companies that they find they find an ice cream cart and they go to the guy and say, I think you should be public. We should take you public and raise you, buddy. And then you da, 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 da. But my point of it is, Lehman Brothers does the same thing as the ABC Schlockhaus. Our job is to sell this company and then turn this stock and then get out of our position and then whatever and go on. So one of the things you want to look at is that the name of the firm, the reputation of the firm, because it does count to some degree, even though I say they're the same, it does count. I'd rather deal with Lehman Brothers than, I won't name a Schlockhaus firm, but a
Sure.
chop house firm. So I'd rather deal with them. But then I'd want to ask a broker, how many years have you been doing retail work as a retail broker? What other experience have you had on Wall Street? What is the size of your book? And when I use the term book, that's basically asking the retail broker, how many clients do you have? How much money do you have under management?
Well, what would that demonstrate if it's, let's say, a large amount of money? What could that
Well,
lead to?
if he has a larger money, what that's telling me is that there are big players that are entrusting you with their money. Granted, I only have $100 and I'm giving you my last $100. But if you have a book that is that you have like about 10 million under management, that alone tells me, wow, you must have some players in there that that really like you, really respect you, that they're willing to trust you with their money to manage. So yeah.
What are some of the responsibilities and roles of, let's say, a competent partner, investor, or yeah, like I'm sorry, broker, retail broker that isn't just, or I guess that's been able to balance that implicit salesmanship that comes with the job.
Well, a competent retail broker is going to look out for the best interest of his client, which is something that they will all say that they do. I mean, Widow Smith, she has limited income and she's on a fixed income. So why would I put her into something very speculative,
Mm.
where she could lose her money? I want to make sure that she has her money to last her for another 10 or 20 years. Whereas if I'm managing the money of someone that's under 18, and people under 18, they cannot have brokerage accounts, but it's called a Uniform Gift to Minors Act. So, you have an adult that's over the account supervising for the adult. Or if you're in Louisiana, I love Louisiana because they use the old French names. In Louisiana, it's called a usufructuary account. Very, very she. Anyway, if I'm managing the money for a young person, I can have a little bit of fun and put that money into some more aggressive stocks, such as a Google, or such as some PlayStation game. PlayStation, does that even exist anymore? Some gaming company that I don't even understand, and I said, okay, this looks like this would work, or something like that. I can be a bit more speculative. And then if you're someone that's under 35, you can just be looking for growth companies whatsoever, meaning that internet, oh God, when I started out, internet was just new, and every company could raise money and they were trading and everything like that, but most of them did not survive.
Mm.
But when I say you could be a bit more speculative, you could be looking at green companies. Tesla used to be a penny stock. Look at it now.
Wow.
Blink, that used to be a penny stock. No, it wasn't. I remember it was a private company, but yeah, that used to be a small company. And for those who might be listening, I'm not talking about Blink the gym. I'm talking about Blink that they make they construct stations for powering up electric cars. But that used to be a penny stock, and look at them now. So what I'm saying is, depending on what sector you like, you can be a bit more aggressive and look only at growth companies. When I use the term growth companies, these are traditional companies that the investor is expecting them to grow. They're not expecting a dividend in return. I buy this stock at $1. I'm hoping in 3 years it's going to be worth $10. Whereas if you're talking about a more conservative company, such as a utility company, I bought utility XYZ at $20. They pay a $4 dividend. So every quarter I'm getting $1. So you don't expect that stock to rise too much far above $20, because whatever profits they're taking in, they're paying out as dividends.
Is there a natural tension that forms with those, in the sense of are they giving up growth for that dividend?
I would say no. I mean, if that's a hard question to answer, because every company wants to grow. That's number one. But then I wouldn't say that these companies are giving up growth for the dividend, because you got to keep the dividends coming and keep them consistent. And so if the company stays stagnant, that doesn't necessarily mean the stock and the dividend would remain stagnant. You have to grow the company. A company is almost like a living entity. You want to grow. You want to grow it.
What have you seen because we're going more in the investment banking realm of the conversation. What are some of the red flags when a company, based on its management, that it's likely not in a good place? It looks like there's only, I don't know, I'm ripping the Band-Aid off. I'm trying to get there. There's so much.
That completely depends on the management. When you're talking about a small cap company, and when I say a small cap company, that's any company that has a market cap of $2 billion and down. And for your listeners, basically what it is that you want to find the market cap of a company, you multiply the closing stock price by the number of shares outstanding, and you get what the market capitalization of the company is. So therefore, when you're talking about small cap companies that are 2 billion down, performance and success is, I'd say, 95% dependent on management and their track record. I mean, if you have a CEO that is dynamic, he's going to take XYZ stock company, and he's going to make it into an IBM, or he's going to take it to a level where the next one, he can toss the baton to the next CEO who could take it from that level on up. So it completely depends on management. Now, you have reckless management on all levels and all market caps, meaning that I know the companies of the CEOs they're so into the company and they're so in growing the company that the stock might be selling at a nickel. Let's not go. Let's say if a penny stock, so your listeners know, is anything that's $5 or under. But a stock might be selling at $3, but you have a CEO that will stay at a budget motel, will be very spendthrift with the shareholders' money, because they're looking to put as much money, and he's focused to grow the company. Then you have the CEOs who are not as focused, and that this is like a party place where they're like saying, woo, okay, the stock is trading at a nickel, but I'm staying at the Ritz-Carlton because I'm a CEO. That's on all levels. You can talk about large companies I can't remember the book, but there was a great book on R.J. Reynolds many years ago, where the CEO had a private plane fly his dog from New York to California. So, I mean, if shareholders knew that and saying like, okay, you're spending our money
Hmm.
because see, when you are a shareholder, you are owner of the company, whether you have 100 shares or whether you have 2 million shares. Now, granted, the 2 million, the shareholder with 2 million shares might have a little bit more say in the company, but regardless, you are just as much a shareholder and owner of the company as he or she is. So therefore, when you hear this story of about you flew your dog on one of our private planes, the dog, the pilot, and you had to have a stewardess or maybe two stewardess because that's by law. You flew that dog by itself from New York to California. Can you imagine the money that costs?
What do you say to the listener right now, who is the chief executive officer of their company with 80 employees to 20 to 5 to 500 to 1,000, whatever they are, and they're saying, this guy doesn't know what he's talking about. I own this company. This is my money. That's mine. Those other people, they invested, they're doing that. They're lucky to have me.
Well, it depends on the CEO. I mean, if you're a CEO that owns 80% of the outstanding stock, okay, yeah, you can say it's your company because you can control however everything is voted. But see, if you're a CEO that owns like 20% of the company, I mean, that's a huge that's a huge percentage. But see, you only own 20% of the company. There's 80% of us out there that
Mm.
we own the company, and so we could tell you what to do. You work for us.
What would you, is there utility in having that feedback between the CEO and the shareholders? Is there utility? Like, why is that helpful to the company or business? If you were to think about in theory, from your experience, seeing the companies that were successful, seeing companies that weren't successful, is there utility in having that feedback that the plane may not be the best use with the dog?
Well, see, these are things that you might not find out. And when I say might not find out, let me explain that a little bit more. Public companies are required by law, the Securities Act of 1933 or 1934. I don't know. I'm old. It's one of those security acts. They're required to maintain communication with their shareholders because it is the shareholders who are the owners of the company. Now, not everything is shared, meaning that it is shared, but if you can find it, I'm sure that is not the dog flying on the plane by itself was not listed in RJR Reynolds expense report. That was like saying like movement, it was clouded in some way, it was covered in some way,
Mm.
so
Well, okay,
miscellaneous
so my
expenses.
question is more pointed to your personal opinion after 3 decades on the street and doing things of like investment banking, which we're going to unpack, private equity, investing into companies to make money for everybody. Would you think that there's a utility in that feedback loop between shareholders and what they think is right or wrong of what the management of a company is or is not doing? Like, is it, yeah, I'm just, it's more of a theoretical question in your experience. Like, what happens here? I'll pose it another way. What happens to the company? Because you're looking at over the years, all of these small caps, right? Like you said, 2 billion and down, which we'll unpack. So the majority of small businesses that eventually become the Apples, statistically, they die before they become the Apples or the Berkshires. So my curiosity is like, why do they die statistically? So my question is, what happens to that CEO that's wasting money? For that
Well,
management that's wasting
usually
money,
they
or it
get
could be
fired.
argued.
Usually they get fired. But let me see if I'm following your question. To answer it a bit, I would say that it depends upon the CEO and it completely depends on management. There are CEOs that are completely very transparent with their shareholders. And they enjoy the communication with shareholders. And if you are a shareholder, keep in mind, every company usually has an investor relations department. If something's going on that you don't like, you call the investor relations department and say, why is the stock down? And they are responsible to give you answers and to maintain communication with you. I mean, that is part of the job, and that is part of the Securities Act, because it's not their money. It is the shareholders' money. The shareholders own the company. Now, to go back to your question, you said, why do some die? That's not, I mean, there's a lot into that, which can mean, times change, technology changes. Um, what at one point you were meeting a target market, it just no longer exists anymore. For example, for those out there who might be listening who remembers Rolodex, everybody knew what a Rolodex was and everything like that. But then you ask anyone that's under 30 right now, put me in your Rolodex. They have no idea what you're talking about. I mean, what is a Rolodex? I mean, you get to the point. What's a landline? Technology has changed. That need is no longer there. I mean, Singer. Ooh, that's a sewing machine. I'm trying to think of the Smith and Corona typewriter. It's a dead industry. Kodak, which is still in business, and I feel bad. I don't know what they're doing now. Kodak used to make cameras, and that made all sorts of cameras. But everybody's got a camera now, so what's the need for Kodak? I mean, I haven't looked at the company in so long. I don't know what Kodak makes anymore, but it can't be cameras, or a little of their operation is cameras at this point. They're not needed anymore. But then there are companies that go through cycles, or they just have bad times because of conditions. I mean, like, I don't know what Apple Computer is right now, but I remember when Apple Computer was having a tough time, and the stock was as low as $7 a share. And everybody thought it was going to go out of business. Wow. And it was actually Bill Gates, the competitor of Apple, that because he's Microsoft, he put in money to save Apple. Okay, so like if you would have bought Apple, like when I knew it was $7 and $8 a share, and we're not talking about the splits and this and that and who's watch, who's watch. It's a $156 stock now. So there's up and down cycles.
So can you think, in your view of it, there's a technological aspect of why a company would go under?
Absolutely. There's a technological aspect. As I said, let's look at Smith and Corona. They used to make typewriters. They control the market for typewriters. When's the last time you saw a typewriter? I mean, I had an assistant that walked into the office one time and looked at the typewriter and said, I don't know how to use that. So, I mean, what does Smith and Corona do? They're either they have to change what they're doing, or they go out of business.
In your time in a family office realm, what were some qualities of managements in companies, cultures, that you would say were positive and constructive, that if someone was listening to this, they'd say, okay, that's how I have to be?
Okay, develop your question a little bit more.
Well, I guess, yeah. What were sound ways to behave that produced results in your experience? And if it's so, you can always invert, meaning, as Abraham Lincoln said, I learn from everyone I meet. Usually it's what not to do. So my question, if there isn't anything positive or constructive, I'm saying you could always invert, meaning, in the time that you interacted with managements, what were sound key ways to grow companies and grow their businesses versus unsound? Like, example, if I was use the dog on the airplane, regardless if shareholders know it or not, the dog on the airplane, I would argue, is an unsound way to empower management. We're wasting money, period, end of statement. There's no justification for that. Of course, there's a million justifications to that psychologically, but that doesn't mean that's so. My question is, what are good ways to run the companies? in these
Well,
small
it
cap
depends. It
arenas?
depends on who you talk to. I mean, before I fully answer your question. I mean, the CEO of RJR Reynolds, he could have justified his dog being flown from New York to California by saying, "I need my dog to work effectively. I cannot work without my dog. My dog calms my nerves and everything like that." It'll work for some people, but when,
A pretty
I
good
mean,
argument for that. I mean, you should be a lawyer.
but
You should be a
see,
lawyer.
when you're looking at a company, particularly companies that are in the healthcare business, you want to look at companies that you want to know what a company's business plan is. Okay. Then you want to know, well, what are the milestones or what are the markers that the company has set to know that they're reaching, they're accomplishing and they're executing properly on their business plan. If your health XYZ healthcare company and then your drug is for COVID, the cure for COVID,
Mm.
not just the injection, the cure for COVID. Well, okay, you want to look at what steps are they moving to make it that they're going to ensure that they're going to have a cure for COVID, which I want to point out, there's no guarantee for that because that happens all along. But if the company says, okay, by 5 years, this is where we should be, we should have this accomplished. By 10 years, this is where we should be, we'll have this accomplished, we'll have the clinical trials. And then by the third clinical trial, we should be good to go. So if you invest $5 in us now and you stick with us all through that time, we believe that this drug is going to hit the market and it's going to make all your money that you ever thought that you would ever make. Now, what happens is some drugs go through the last clinical trials and they don't work. And then
Wow.
the stock and the company collapses. Then that's why you have to make sure when you're speaking of healthcare companies that they have more than one protocol. Okay, yeah, our COVID drug is the main thing, but then we've got something here that's going to help herpes too, or we've got something here, blah, 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 blah.
Where does the funding primarily, what type of investor, now I'm just curious, like focuses on the healthcare space, if it's that risky in that way, or is it the risk really relative to how much the return could be? Like if there's now I'm thinking like, if there's an exponential return, you could lose the money, whatever. But that sounds like a very risky thing as a lay person. So like what types of people get involved in that? That's my question. Is it philanthropy?
It depends on the company and it depends on the investor and it depends what they're looking for. Because he's specifically focusing on healthcare, for example, most healthcare is based upon the white male. That's just a fact in the United States. Most of it is based on the white male. But then towards, I'd say, the late 90s, and as women became more involved and moved up the ladder, you have many female CEOs. And then these women CEOs are becoming CEOs of healthcare companies. And if I'm a female, I'm looking at this and say, I want to look at that. I want to look at the female health companies a little bit more closely because this female CEO might be more attuned to how my body works. I'm a female, she's a female. So therefore, she might have a different approach from a male type of approach as looking as far as a solution. So you might say, well, I'll give Jane Doe a try. Jane Doe has this type of experience. She's a woman. Not only does she know the numbers, but she's a woman and she knows how things affect me. Meaning that, many people don't know this, that heart attacks in women is something that's quite common for women in their early, their 50 to like say 53, 54. Most women don't know that. That's because health is not based on diversity. It is based on what the studies and all the health has been done for a white male.
How much is that realm? I guess this view, this perspective of investment around, let's say, male, female, where data has been derived from where it hasn't. Is that like a proliferation of the last few decades in the investment realm, and it's molding the architecture of what
Yeah,
is
I would say it is quite new. I mean, the point of it is this is why many boards and many companies are looking at diversity. Diversity does bring in a different point of view. I'm not saying the other ones were wrong, but they just had one parallel point of view because that was all that was known. I'm trying to think of the example right now, and I guess you see this more in retail. XYZ company, I don't know the name and it's not important, but they came out and they put out a shirt with a monkey on it. Okay. And then when it looked cute and all this kind of stuff like that, and they said, "Oh, we're going to sell a lot of these." But then when that shirt hit out, and they're saying, "Why is this black child wearing this shirt with a monkey on it?" And there was a whole big thing, and they had to pull the whole shipment back. Now, with diversity, if you have blacks, if you have a female, or you have some other on there, there's the sister would say, I don't think that might be the best design you want to try. And then she would give her reasons why, because the historic blah, 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 blah. And then the CEO and then the traditional white male say, I never thought of that. You got a point. So let's see if we can do this differently. So that's
an interesting, although I agree with it, definitely that the altering views would have different emotions.
That's why the women in healthcare is an important factor. I mean, women are, you have these men sitting around a table talking about women health, and they have no idea of what women, they don't have no idea what a woman goes through every month, or through her lifetime. But by having a woman or women part of the company, part of the board of directors, they say, have you thought about this? Have you thought about that? Have you thought about this? Now, I don't want to get into politics, but this just clearly illustrates the point. This thing with Roe versus Wade or something like that being overturned. The decision was tunnel vision. I'm not making a judgment. I'm just saying it was tunnel vision. But now what you're seeing now that it's done, you have women that are coming out that are saying that, okay, this is what happened to me. I'm not, this is a health situation for me. And then you have people who are now looking at this and saying, oh, I didn't know that happened to women. But now they're learning that. So this is what I'm saying, where diversity is very effective.
How would one build a board to increase so that you take into that, let's say we take that as a point. I'm going to avoid diversity of different walks of life is a piece of it. What are the other pieces of, let's say someone listening, they say, I need to build a board for my firm. We're going public. Who are the types of people as far as their experiences and their specific knowledge or categories, would you say, like, and how many people generally comprise boards when we can focus on small cap, micro, nano, and below, if that's what, but what are your thoughts?
Well, to answer your question, I don't think that there is an answer, because it depends on the objective of the company and the objective of the owners, the main owners of the company. Meaning that you have those that said, you have the CEOs that say, I wanted a very diverse board. I want women, I want minorities, on the board, because I want to see all types of opinion. I believe that they have some input on that. Then you have other CEOs that say, we don't need that. We don't need anything about this. We're good. Then you might have a CEO that says that I want board members to be experts in 2 disciplines. I want a lawyer. I want because money's tight, because you have to, technically you're supposed to pay board members or something like that. But money's tight. I want this individual to have an accounting and a law degree. So it depends on the company, what type of company that they're constructing. I mean, let's take a company. I don't know if they're public. Well, Popeyes chicken.
Yeah.
They market, okay, yeah, Popeyes is for everyone, and everyone loves fried chicken, whether they want to admit it or not. Most people do love fried chicken, but their marketing is geared towards the Black community. Okay. They have not one Black person on their board of directors whatsoever. And there are people that have a problem with that. Like, how are you marketing me and this food and stuff, like putting this in my community? It's not healthy, blah, 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 blah. Yet we have no input, African-American minority, we have no input in what is being marketed and what is being sold to us. but to answer your question, and not to get into politics and all this kind of stuff like that, it completely depends on the company's objectives and what they feel their needs are.
Mm. Well, what would you say is a good amount of people on a board, or not? Maybe it's just your opinion. What have you seen work versus not work at all? Too many people, too few people, and in your view, personally, some very important, let's say, skill sets to make up a board.
Well, from my background, and I have to admit, my background is limited. I don't think there's an answer to that. It completely depends on what is the need of the company. I mean, a CEO might say, okay, we only need 3 people, me, the CFO, and the COO. We're the board also. Some people might say, okay, we need these 3, and then we need somebody as an outsider, from an outside, to be looking at it. So that's 4. Then some people might say we need 12. It depends. As far as I know, there's no pat answer to that question.
Did most of the companies that you had interactions with, or I guess what percentage had boards and what didn't, in the small cap arena, right? So
well,
that's
every
2
company,
billion and
every
down.
public company has a board. You have to
They
have a
have
board
to have one.
Yeah, you have to have a board of directors. And even in a private company, like I shared with you at one point, private companies, although their stock it doesn't trade, they are stock. They have stock. The father might own 50% of the business or 60% of the business. The mother might own another 10%, and then the children might own this and might own that. So there's stock in private companies.
And what was it like? So I guess what's the learning lesson from was it DLF or DF? Am I saying that right?
DLJ.
DLJ, yeah.
Donaldson, Lufkin, Jenrette.
What was it?
Donaldson, Lufkin, Jenrette.
What made them? Because when I was researching it, they had made an argument that they were like, that firm was like David versus Goliath. They had less resources, less people, but they were able to really compete with the quote unquote big boys. What was your experience like there, and what would you say that their unique value promise was?
Oh, wow. That's a great question. And thank you for asking that. I can say this, Dick Jenrette was one of the nicest persons that I have ever met in the financial world. Beautiful man, great man. And what he did, just on the side, before I answer your question, is that he would buy these old Southern plantations and rehabilitate them, and because he was trying to preserve the legacy of the antebellum age. Just what a wonderful man he was. But basically, these were 3 friends that got together and said, look, we have some money, and we think that we can market this company to XYZ person, and then they will come on and we will do the best by them, and we will build our company. And that is exactly what they did. I mean, they went after the market that no one would be going after. But then, just like everything else, time changes, and you grow, and so do you change. I mean, just to help people think, you can think about this with luxury goods. Louis Vuitton, for example, that started as a family business. The father just had said, I want to make great suitcases, great luggage, and all this kind of stuff like that. And then I want to market this to the person that can only really afford to buy one good piece of luggage, and that's it. That piece of luggage has to last over a lifetime. That's where they started. But now they're like these huge manufacturers of a company that tells you that you need a collection of Louis Vuitton. So it depends on the company. But Dick Jenrette, they were just 3 friends that got together. I mean, all 3 of them did. Donaldson went to buy a ranch. I mean, he made his money. He bought a ranch in some state like Utah, something like that. I think bought half the state. And Lufkin, he retired and he went to do whatever he was doing. But Dick Jenrette stayed until basically the end, when the firm was sold.
Why did they sell to Credit Suisse?
I don't remember them selling in a credit squeeze. I mean, they sold
Credit Suisse.
Huh?
Am I saying that wrong? Credit Suisse, is that?
Credit Suisse.
Yeah, not a credit squeeze.
Okay. Yeah, well, Credit Suisse made them an offer that they could say no. They couldn't say no to. I mean, that's almost like
Yeah, can we unpack that? What does that mean?
That's almost like Twitter and Elon Musk with all the mess that's going on here. Now, technology changes every 24 hours. Now, I'm going to say this: if I was on the board of directors of Twitter, this nutty man who owns this great company, Tesla, and I'm going to call him nutty because he overpaid for it. He came up here, he offered us $44 a share, and our stock is only trading at $20 right this time. He believes it's going to go up, but we know that Twitter might be. I mean, remember how popular MySpace was? Do you remember?
Sure.
Okay, do you remember who uses MySpace anymore?
Every other,
So
week.
if I'm sitting on the Twitter board as a director, if my stock is $20, some guy asks $44, I'm gonna say, you got to get out of this.
So okay, so if we unpack that, and we'll come back to Credit Suisse, if it was trading at 20 and he was legally obligated to buy 44 and whatever, he ended up agreeing to that. What would be, if there was a rationalization behind that, if you put yourself in his shoes as a multi-CEO, what could be his reasoning if you were to think outside of the, what do you think? Could it be?
Well, the overriding
from an investment standpoint,
the overriding mission of the CEO of a public company is to maximize shareholder value. So therefore, if word ever got out that the stock was trading at 20 and someone offered you $50 a share for it, and you decided not to take it because you want to maintain CEO, you better have a damn good reason of why you making me miss out on my $30. You know, the stock is trading at 20. I got an offer at 50. The CEO says he doesn't want to sell. Yeah, I'm sitting and I'm waiting patiently what that explanation could possibly be. Because see, your job is to maximize shareholder value, and someone offering $50 a share for my stock when it's trading at $20, justify why I'm not getting my $30. How are you maximizing my shareholder value? And trust me, I don't want to hear what you're going to be doing in 2 or 3 years that is going to be worth 50 or 60. You might be able to make an explanation for that, but see, today I can get my $30. Tell me what to do. So
yeah. So Mike, but my question is, why would Elon buy that at 44? Or what would be his justification? Oh, just don't have a thought.
I don't know. I don't know. I mean, I'm sure he has his people that made forecasts, and see, forecasts are, you try to make the most intelligent forecast that you can, but a forecast is a forecast. It doesn't mean that it's going to happen that way. So
in that case, from a per share value of what the quote unquote market is demonstrating the value of that company is worth, him buying it for what is that? That's more than double. That's like double. And
yeah, he paid a lot for that company. Yes, he did.
He paid 220% for it.
Yeah, I mean, that was one of the reasons why he wanted to try to back out of the deal. But see, the point from in his defense, based on his forecast and based on his beliefs, he believes in the story. He believed in the story that his people was telling him. I believe that this company is going to be worth more and that this is a good investment to buy.
And so now it's up to, now in the forecast of investing, would you say that it's up to him and whomever this new management team is going to be, that based on this conversation you today for our listeners, what are their goals? What are their objectives? What are their mile markers? How are they using the private plane or not for dogs or for actual value producing activities to create? Because we didn't get into what's under the hood yet. Meaning, when I say the hood, would be what the market thinks a company's worth. That's the market cap.
Yeah.
Under the hood would be how the economics work. So now, would you say that now Elon, based on this conversation, he's got to do the work with this management team to raise, if we talk about specifically Twitter, to raise the value beyond whatever it was acquired
Right.
for, and
Actually,
he could fail at that.
that's his job as CEO, to maximize shareholder value. Absolutely. I mean, it was Time Life or Time Warner that bought MySpace. Now, when they bought MySpace, MySpace was at a premium. Everybody under the sun was using MySpace. Now, nobody even knows who it is. So therefore, in that case, they like paid, and I'm making numbers up, they paid $30 a share for something that's now worth $1.
Mm. How often does that happen with acquisitions in the
Oh,
culture of
I don't know the
Wall
answer to
Street?
that. How often does it happen? But it does happen. Technology changes. Something falls out of favor. This is why I was giving the example that if I was a board member of Twitter and I know how fast technology changes, I know how fickle the public can be. Yes, I'm in vogue right now. I'm the hot one on the street right now. But come tomorrow, I'm MySpace. So I'm like saying, let's take this money now and run.
Mm.
Whereas Elon Musk is looking at it and say, okay, it's right here. I think it's going to grow to this, and I can grow this to that. So I think that this is a good investment.
What do you personally enjoy most about equities, marketable securities, the Wall Street? What do you like?
Oh, going to dinner with the CEO. No, I'm just joking.
All right.
No, I'm just joking. I am just joking. The shareholders only knew how money was spent. I'm just
Yeah,
joking.
are you joking because of the apathy involved, or the indifference of going to a dinner with the CEO? Or yeah, what is the joke reveal, right? Because there's so many people listening to this that either are wannabe CEOs, they literally are, right, wannabe CEOs, and we can unpack that, or they are CEOs and feel pride in that, or they have worked for terrible bosses, or so I'm saying, like,
Well,
what's the joke reveal to us?
I can only give you the opinion from my perspective, and I'll give you both sides. Uh, a CEO, part of the job is that you are looking to bring in more investors, to bring in more, to bring in new money to maximize shareholder value. So therefore, if I have to take you to dinner to tell you the story, that's just part of my job, what you're supposed to do. Now, from the other side, which is basically my side, if I'm an investor, okay, you're asking for me to give up my time, my 1 or 2 hours of time and stuff like that to listen to your presentation. The least you could do is buy me a dinner and a drink so I can listen to this, blah, blah, blah. Now, even though I made a joke, and if there are others that who know me, who really know me, they know that that is the worst. I hated that. I after you do it for so many times, you just hate it
Mm.
because the story is boring. You don't believe in the product and everything like that. You're only there, whatever to whatever, and you just sit there and you listen to the presentation and you just go, I really could be watching television instead of having, than doing this and stuff. I hated going to those things. I couldn't stand going to them, because I had better things to do. I mean, there were some companies that literally I was very interested in.
What
I was
about
just
them led you to be so interested in it? Yeah.
Oh, they were doing something. They were doing something really dynamic. Either their technology, their healthcare. I was very excited to go to those type of due diligence meetings.
How do you define dynamic, and what are some of those, if you were to bring it to life, right? Like, what am I looking for? What is someone listening to this looking for, that maybe they could look in the mirror and think, would I be a bore at dinner with Gary, the investment arm?
Well, in my case,
Like,
I
right,
mean,
self.
it depends on the investor in the market going to. I mean, I can only speak for my case. I mean, if it was a French firm and you want to speak French and do a French presentation, I was there. I mean, I love it because I like French, and so there I was there. But then if you have an interesting product or something that's dynamic or something like that, I mean, I just think that's and keep in mind, I could be wrong. I'm trying to think. Have you ever seen it's great for boxers as far as coordination and stuff like that. You put it on your head. It's like you put the thing on your head and it has a ball attached to it, and you're supposed to punch the ball.
Yeah, like VR,
I don't know. Yeah, something like that. But
Oculus
yeah, yeah,
technology. Yeah, Oculus type.
yeah. And you punch the ball. It helps with your coordination. A lot of boxing. I just thought that was like a great little product. I said, look at that. Look at you getting your cardio. You get your coordination and stuff like that. I mean, that's a company, for example, if a company said, we got this ingenious project, I would have loved to have gone to something like that and seen the demonstration and be fascinated by that. It depends. It depends on
How
people.
important is it for companies to begin with the end in mind, in the sense of seeking capital? And like, why is capital important? Because if the entrepreneurs that I meet, they're not thinking about these things, Gary. They're thinking about selling. They're thinking about maybe paying the very beginning bills to be self-sufficient. They're thinking far out enough to think about marketing the business and hiring, so why is it important to be thinking steps ahead as far as bringing in investor partners
Well, that comes
for
down
a
to a
private
company's
business?
that comes down to a company's business plan and what are their objectives. I mean, there is a term that certain management companies are going so far, and so they do have exit strategies, meaning that I'm taking this company from A to C. Now, somebody else can take it from C to F because I ain't doing that. I'm out of here by that. So it depends. It depends on the company's business plan and what is their exit strategy. I mean, companies are to grow. They cannot once a company becomes stagnant, a company's on the road to death.
What causes stagnancy?
Laziness, laziness, bad management. Like you reach a point, and people can transfer this to maybe their own personal life and say, life is good. I don't have to do anything more.
Mm.
Okay, but see, while you're feeling that you don't have to do anything more, life is continuing, meaning that the gas company, they're going to raise their rates. Their electric company is going to raise their rates. The water is going to go up. And if you think everything is fine, what used to cost you $20 water bill this month might cost you $30 next month or next year.
Mm.
So therefore, that is now eating into your principal.
Should some companies not sell ever? And then if so, what would be some of the value in holding? So let's say you start a company, someone's listening to this today, they say, you know what? I'm finally going to start my company. It's 2023 Q1, and I'm going to do it until 2073. So 50 years. What would be the benefit? And through that journey of 50 years, they're getting offers from this one to do private equity. They're getting offers from this one to do venture capital. They're getting offers from this one. It's a conglomerate to just completely take them out, and they can float off to the sunset with their shekels and have someone else manage that. So like, what would be the reason that someone, and are there things that come to mind of case studies of companies that just never sold, they stayed private, that's their story?
There are such stories. It depends. It's a wide universe. For example, let's go back to luxury goods. Let's take Coach, for example. Coach was a wonderful, exceptional company as a private company. The customer service was without par. The product was astronomical. But it reached a point where the company says, okay, if we want to grow, and let's not say the management said not only just grow, but if we want to make more money for us, Sara Lee, the food company, said they want to buy us, and this is what they're going to do with us. So to make a long story short, that their Coach sold itself to Sara Lee, a food company. A handbag company sold itself to a food. What the synergies they thought? Maybe you put your yogurt. The people put their yogurt in their handbag or something. I don't know. But With that acquisition of Coach and Sara Lee at the beginning, Sara Lee was able to expand it. I mean, whereas Coach had like I'm just making numbers up at this point. Whereas Coach had 10 stores or 10 retail outlets, under Sara Lee, they were able to have 50 retail outlets. Instead of hand making everything by hand or every handbag by hand, they got into more manufacturing because they had the opportunity of Sara Lee, and some of the production of the goods could be shifted to mass manufacturing. So the company grew. And then for whatever reason, Sara Lee just said, okay, we're bored with this. And then for a number of years, they did not put any effort into Sara Lee, and the brand was dying until Coach bought itself back. I mean, it's still a public company, but Coach bought itself back.
Do you see
But
that?
in
Oh,
buying
sorry.
itself back, and I think it was, they weren't about to close, but let's say they were at distress levels. I mean, Sara Lee just didn't even pay any attention to it whatsoever. You know, you would go into a low retail, a 99 cent store, you would find a Coach bag. And unless you knew what you were buying, you know, but basically they nearly decimated the brand because of neglect.
Wow.
So Coach was able to buy itself. Yes, it was more expensive than when they sold it, but they bought back a larger company, a more widespread company, a more known company, and so and then they retooled it, and they are where they are now.
Do you know how they bought it back? What type of structures they used, or
Oh, I don't remember. I think it was a it was a cash transaction. I think it was a cash transaction.
where would they have gotten that? Would that come from cash reserves in the business?
Part of it could have come from cash reserves, but then part of it could have come from investors, meaning that they could have approached a number of investment banks and said, man, said, listen, we want to buy the company back and see, we're going to own this amount of thing here, but if you give us so much dollars and stuff like that, you'll own 30% of the company.
And would the bank say yes because there'd be enough liquidity in the or retained earnings in the business as well as other assets that they'd be able to control that would kind of protect their bet? Like, would the bank be the one buying it with whomever other partners there were, and then
No, they would be investors. They would have stock, and they would have 30% of the company. But see, the bank, the investor, not just the bank, the investor would do their due diligence on this and say, like, is this worth to put my money into this to help this management team buy this
would
company?
this be different than a hostile takeover?
Oh, much different. A
What
hostile
would be the difference?
Well, a hostile takeover is basically, from what it's hostile, you know, like basically what, you know, like I want this company, I want to buy this, and the CEO looks at the person and say, well, we thank you very much for your interest, but we're not for sale. And then the person, like big CEO, said, I want this company, and once again the board tells them, say, well, we really thank you for your interest, but it's not for sale. And then the hostile taker, he would go right directly to the shareholders. I've gone to your CEO, I've gone to your board, and I told them I'm offering this. Your stock is $20. I said I'm offering $50. So I'm going to other shareholders, and I said I offered them $50. They said it's not for sale. Then I'm calling up shareholder relations and said, you know, I need to talk to somebody. Somebody wants to buy my shares for $50 share, and you guys are not selling. What's going on? And so basically, you're being taken over.
And so this buyback from with Coach was a private buyback. It was not hostile. And in that realm, potential buyers are going to investment banks that are going to lend them money or become their partner based on the real assets of the equity they're buying.
Well, I don't think that you're phrasing your question right. Keep in mind that everyone's going to do their own due diligence, and it doesn't have to be a bank. It could be just one person. You know, like, it doesn't have to be a consortium. It's just, you should take it that it was investors buying the company back. Management of Coach wanted the company back.
Mm.
And then Sara Lee says, okay, we'll give it to you at this price, but we want to return, we want to keep 10% interest in the company. So they're still owners of, shareholders of the company. But then, basically Sara Lee look at their numbers and say, we really are not paying any attention to this company. And it's more of a pain in the ass than anything else,
When people sell their companies, that, for example, so the example of the earlier company we were talking about, Lufkin and all of that, selling to Credit Suisse. When they sell, and you said they had an offer they couldn't refuse, what do people generally do with those offers they can't refuse? Do they create family offices? Do they have financial advisors run it? Do they buy real estate? Do they put it under their mattress? Do they end up just working anyway? Like what are, I'm curious, like
what do they do
what does
with
that mean?
what do they do with offers that they can't refuse?
Yeah.
They accept them.
And then, yeah, okay. And then what do they? But then, and then what do they do?
And then they go all over the South finding mansions to build and to
Mm.
renovate and enjoy the rest of their life. It depends on what they want to do with it. It's their money. They've made their profit. So listen, I don't have to deal with investments anymore. I can just deal with the rehabilitating Southern mansions.
Well, but so okay, in that regard, money runs out when it's spent and it's not multiplied, right? So what's
Money
the
runs out.
sound?
It depends on how much money you're talking about. I mean, the point of it is whether we like it or not, we all have a finite life here. Dick Jenred knows one day I will die. I think $1 billion will last me until I die and I'm good. So I mean.
So would you say that at a certain level, people aren't even thinking, they don't have to even think what's next. They can just shut it off.
I mean, it depends on what your goals and objectives are and what a person wants to do. I mean, a business owner might want to say, listen, I love my business, but I'm tired of this. I want to sail around the world for the rest of my life. I don't want to do this. I don't want to work anymore.
Have you seen that?
Huh?
Have you seen that? Is that part of the culture?
I have in my career, I don't remember where, I have once, I have known of one CEO whose name I can't remember that did sell his company, and he and his wife, they did cruise ships, but they had a suite and they just sailed all around the world for the rest of their lives.
What do you think of that?
Well, that's nice if you like to cruise ship. I mean, I think it's the cheapest vacation that you ever could take. I mean, you got your food, you got your accommodation, you got entertainment, you get to see different places, all for one price. But yeah, I recall, I forget what his name was, but yeah, I recall because he was winding out of the business and I had to call him at different ports because they would be different places. And so, yeah.
What is a junk bond for people that don't know and they hear that all the time?
Junk bond, I think the official name of a junk bond, because junk bond is a slang term, high yield bond securities. Basically, what those are, I mean, you have a general accepted practice of what is considered safe. A bond is supposed to be a very safe type of investment interest, meaning that you give them $1,000, they agree to pay you this type of dividend every 6 months. And that's based on the underlying thing of the company, and it gets an A, B, C rating or something like that. A junk bond, this was a creation of Drexel Burnham back in whenever, as far as I know, Drexel Burnham, Michael Milkeson. These were companies who normally would not qualify for credit, meaning that they were on the edge, but they had a good idea. And if XYZ fundamentals stayed the same, they could make it. But it's a risk. They can fall apart. So therefore, for that risk, they're willing to pay this type of interest on the $1,000. You give them $1,000, they're willing to pay you 25% interest to get your money and help them make it to their goal. So they were called junk bonds because of the risk factor that was involved in them.
How important is it not to lose money when you're investing?
Very.
I do mean that seriously.
No one likes to lose money. I mean, I don't know anybody that likes to. I don't know anyone that likes to lose money. No one like. This is no. I don't know anybody that likes to lose money. But the point of it is that people will be accepting of losing money. What I believe, if there's a person that they put a good faith effort toward doing what they set out to do, their business plan or their objectives. Now there are scams out there. I mean, there are frauds out there and everything like that. I don't know anybody that likes to lose money. People believe in you. They believe in something. They believe in the product. They believe in the solution. They believe in the management team. They believe in the person. They want to help you succeed, and they want to be a part of that.
You think it's a lot like, what are some of the rules of raising money or investing, working with investors? Like, what do investors want to see? What do people that are willing to invest in risk capital and small business, what do they want to see? I think it's kind of piggybacks on that, but it's very
but I don't think
I
don't think that's a question that it has an answer, but it doesn't have an answer from my view. Meaning that once again, it depends on the company, it depends on the management, it depends on it depends on the product or the solution that you're offering. I mean, I can give this a story. I can give this a more like a real life story. You might not be old enough, but people remember the comedian Carol Burnett, right? Comedian and everything like that. And she always tells this story. Well, she did a show and someone a husband and wife thought she was so funny. And they're saying, you're going to be a big star, And then she says, "Oh, thank you, but I have to go to New York, but I have no money to go to New York or anything like that, and so I have to do this here because I love what I do." And then the next day, she received $100 from the couple to go to New York, and the only condition that they had for her is that you never tell who we are, who gave you this money. And she's like 80 years old, and she has never told. She has never told who it was. People like to invest in things. My belief, people want to see other people do well. Generally speaking, and I'm sure there's going to be people that disagree with me, even though some of the evil people I have encountered. I take a thing that 98% of the world is good, and that people have good hearts and they want to see everyone do well, or they'd like to see others do well, and if they can help, they like to be a part of that. It's the 2% that you got to worry about.
So some of that 2%, what are some red flags for you that if you see it in the investment space, in the business, like let's start, small cap arena, that's the 2%. Let me get away from this.
I don't think there's a question to that. I mean, you have to go that's based on a person's background and their experiences going on. I mean, people have seen different things, I mean, what is it? A con man, what's all saying? A con man can recognize another con man, that type of thing. Some people don't have that type of experience. A con man can scam people, and it's very unfortunate because that can embitter a person for the next person and stuff like that. But think about it. Think about giving money. The only thing I can equate to this: think about giving money to people in the street or down on the level. Now, out of all the people you encounter, a lot of them might be scams, or they might not be using the money that you would like to see them use it for. But then there are those that truly need the money. They really, really need the money. So you have people, investors, so to speak, or that will never give to people in the street under any circumstances because they don't trust them. But then you have the other people that will walk the street and say, "I don't know what you're going to do with it, but I'm going to give you this $1. I'm going to give you $2 and just bless you with it and hope you do the right thing by it. Depends on the person, depends on,
Mm.
I don't think there's any pat answer to that.
What are you most excited about for 2023?
Oh, I haven't thought about that. I haven't thought about 2023. What am I most excited about 2023? I guess that I could bench press my body weight now again.
Oh, congratulations.
Oh, as you get older, this gym thing ain't fun. It really isn't fun. I haven't really, I have not really thought about 2023. What I enjoy doing, but I've gotten more involved in my art, following my art people, following artists, following very other creative people. I've done, I've been on a fascinating journey, an absolutely fascinating journey, tracking my ancestry. I mean, I have just never known how explosive and how fascinating this could be, and just
Mm.
finding that, and so that just that excites me a lot. I'm very fascinated by that. Um, I look at I like the consulting with my clients and stuff. I enjoy that very much because it makes me it makes me feel self-worth after not feeling that for the longest time. Because I look at it and say, "Oh my God, people actually pay me for this?" No. But I really enjoy that because you know. I'm not saying I have one foot in the grave, but I'm on the other side of the mountain. I'm not climbing up and I'm not on top. I'm on the other side.
Mm.
And so, like I just look for things that make me happy. And one of the things that make me happy are the clients who I have chosen to work with and they find value in what I do. That makes me very happy.
How important is it to surround yourself by people that you, like you said, you've chosen for various reasons. So how
Oh,
important
very
has that
important.
been?
Very, very,
And how
very
important
important.
is that in business and life?
Very important. And even in business now, it's now like if you say good morning to me the incorrect way now, I don't want to be bothered with you. I I look at this point to make my life as peaceful and as enjoyable and as creative as possible. I think everyone has something to always give and input and stuff like that. So I try to surround myself with positive thinking and very peaceful people that I like and who like me and who I can learn something from. I enjoyed the learning process and learn new things from. Yeah, so yeah. Right. I can't be bothered with all the other stuff. I really can't.
What book or books have been impactful to your life?
Hmm. I don't know if I have an answer for you. That's a good question. I mean, I've read many books, and I've read the self-help books. I read the philosophy books and stuff like that. I'm going to say this, and people are going to they're going to go, oh yeah, sure. But one of the books I said that's been very peaceful to me is the Bible. Reading that, I don't get the same interpretation that other people, because see, you don't have to tell me. I can comprehend quite well. So I can read something and that just brings me peace. And I'm not trying to impart religion on anyone else and stuff like that. I think religion is a very personal thing, and that basically you show who you are by living who you are. I definitely believe that. And so what I read of that, I can associate different instances with this, and when I've seen this, and I find that very relaxing. So I would say that would be one book. But I've read so many books, I just can't think of anything right now other than that. Other than that chicken out answer, oh, the Bible.
Oh, that's amazing. I didn't expect it, and I think it's wonderful.
Oh, please, that's the
What's
bad.
what?
What affected you the most more? I mean, that's just like that's just like asking the Miss Universe person, and what do you hope for life? I'd hope for world peace. You know, like
What one last thing that if you feel you would like to impart to the audience as a takeaway of the general conversation, your life, where you've come from, what your family has overcome, and what you have yourself. We've covered a lot of ground here, and what's one thing that you think would be helpful for the audience to take away from this conversation for them?
Oh, well, not just on the conversation, but one thing I hope that they do take away is number one, vote. Okay, another pat answer. Okay, so we got that out of the way. The one thing, and this is serious with this. Support the arts. Support creative people. Open your mind. Support artists, support writers, just support creative people. It just brings so much more peace to your life. Now, if you're talking about as far as a business point of view, I would have to say the one thing I want them to do, if they're future investors, to take away is that learn yourself, learn what you want, learn what you expect, what makes you happy. I mean, yeah, you have the traders that are great and say, oh, wow, I made $2,000 today. Okay, if that works for you, fine. But then you have the investors that say that they enjoy investing in green companies because they feel that this is what it's going to do, and it makes them happy. Or they enjoy a private investor taking some money and investing in a children's dance group and hoping that will expand and that can make someone. So you know who you are as an investor. That's what I'd say.
Gary. Oh yeah, more. Wait, go ahead. I don't want to interrupt.
No, you can interrupt.
So you were about to say something.
No, I guess I was going to say, like, if you're a business owner, the one thing that I would want them to take away is enjoy what you do. Love what you do, whatever business you do. I mean, there are so many business owners that do not love what they do. They do it for whatever, they just don't love it.
Wow.
Stop doing that.
I want to make that the title, but that's not up to me. They just don't love it. Stop doing that. Oh gosh.
I mean, stop doing it. Maybe your wife or your husband or whatever, because we're in different times, they might leave you because they can't go to Bloomingdale's anymore, or they can't buy this bag or that bag or something like that. But life will go on and you'll be happy,
Gary, thank you for doing this today. And if you're listening, I would go back to the beginning and really get some perspective of your life. We've all come from different places, but I want to do more and more, have as many unique views on this show as possible. And thank you so much, Gary, for bringing that today. And I look forward to another time. And thank you all for listening to this episode of the Culture Matters podcast. And we will see you on the next episode.
Thanks for having me. Bye-bye, everybody.